Very good morning and welcome to the Market Opening Show, viewers. This is the collab show between Business Today and India Today Television. I'm Sakshi. It's 9 a.m. already and we are here to get you all the opening action. But first up, let's take a look at what's hot in the corporate and the financial space. Yet another massive deal centered around AI and NVIDIA GPUs. Amazon has signed a $38 billion deal to power OpenAI's computing power needs with NVIDIA systems. Comes just days after it fired 14,000 corporate employees. OpenAI says it is committed to spending a mind-boggling $1.4 trillion on AI infrastructure. Amazon stock hits an all-time high after its OpenAI deal. It has driven the Wall Street in the US higher on a tide of tech exuberance. Asian stocks, although, are down on fears of overvaluation. Tokyo stocks also under pressure as Japan's manufacturing activity in October shrinks at the fastest pace in 19 months. Budget stockbroking platform Grow tests its own strength in the market. IPO opens for subscription today with a price band of 95 to 100 rupees a share. Massive institutional interest with its anchor book of around 3,000 crores, attracting bids of 50,000 crore rupees. Another big IPO, that of Lenskart, is set to see the closing of its IPO subscription today. It's a big results day today, with blue chip names like State Bank of India, Mahindra & Mahindra, Adani Enterprises, Adani Ports, Indigo and Paytm all set to unveil their Q2 results. The market will be watching for surprises and for guidance ahead. India's crude oil imports climbed 3% in October, with Russia holding its spot at the top supplier space, looking at accounts for more than a hefty 34% a share. Now remember, this is also with fresh US sanctions looming large. Refiners are trading carefully also with crude oil imports from the US now hitting a 54-month high as well. But Russian flows are unlikely to stop entirely. Very good morning to all our viewers. Let's quickly see how the setup is looking like in the morning trading action. It's 9:08 and the markets have settled in the pre-open space. The Nifty hovering slightly below the flat line at this point. 25,744 is the level at which the Nifty is indicative of its opening at 9:15 a.m. today. There could be a divided action as far as the sectors are concerned. You could be seeing infrastructure, pharma stocks, and even the broader markets tick higher. Continuation of positive action even on the PSU banking space, realty and FMCG. But on the downside, you could again see IT and large financial services spaces. Even the private banks and the autos also start to lag a bit. Now, there could be a lot of stocks that will be in focus in terms of news flows and the brokerage houses updates as well. Bharti Airtel, JSW Steel, Adani Enterprises, Eicher Motors are indicative of a positive start today too. But let's also look at how the sentiment is on the PSU space. We could also be seeing some PSU stocks, including the banking names like SBI, move up in action right ahead of its earnings. Of course, we will also be looking at Paytm from the new age tech basket that could also be in focus ahead of its numbers as well. Big day for earnings, both for large caps and from the auto space. We have M&M also that could be in focus as well. But let me straight away go across to editor for markets, Shell Bhatnagar, right here with us. Shell, good morning to you. How are you looking at this earnings heavy day and what does it bring for the investors today in the markets?
I think, Sakshi, the most important thing is we have the weekly expiry of the Nifty. Yes. 25,840, 25,825 is a region of support. And beyond that, let's see how the market moves up. But 18 points lower as far as the opening quote is concerned, 25,744. Pretty much the rest has been covered by you. So we'll move forward.
There's also, Shell, the other factor that I wanted to ask you. This morning we are given to understand as far as the NSE circular is concerned on the FNO space in the pre-open session as well. Starting December 8, we could be also seeing some pre-open action in that space. How do you see that makes a difference for especially the traders in the FNO basket, Shell?
I think that's more to do with price discovery and better understanding of the market in the first 5, 7, 8 minutes of trade. That is something which is very welcome as far as traders is concerned, because it gives you an idea about how your stock future, in particular options, are going to move. Remember, yesterday Maruti collapsed 3.5% till later in the day, but for those who had purchased puts on Friday, it was a win-win day. So you get an early warning or an early indication of how futures and how options just might start to move by 9:15. Sakshi.
Okay. The National Stock Exchange, viewers, has announced that the pre-open session will now be also held for futures and options, just like how Shell has pointed out. Starting December 8, the pre-open session, just like for the cash market, will start at 9 a.m. to 9:15 a.m. as well. Now, we'll also have to really look at as to what is the kind of FNO traders' response to this, and also whether this will be extended to the BSE as well. That's another one that we have to keep an eye out on as well. Shell, any top stocks that you're watching out for the session today? What should investors be keeping a keen eye out on?
Sakshi, Pharma will come up in a strong show. Mid caps and small caps in terms of sectoral rotation of money will also come up on the fore. Reliance is looking very good on charts, and of course you have a strong move coming into the entire PSU banking basket, so keep an eye out on Canara Bank in particular. BOB looks very strong, and of course a lot of charts pointing out to strength in defense counters and digital space. So these are the 3 or 4 areas where a lot of long side trades in the cash market would be working. Sakshi.
Okay, let me also just highlight a basket of stocks that all our viewers should be keeping an eye out on. That stocks are in the news today as well. TVS Motor from the auto space will be in focus. Remember, the company has bought 2.9 million shares in TVS Credit Services for 1.72 billion rupees, strengthening the financial arm, and therefore the stock could be well in focus. Reliance Infra, however, could be in focus because of negative reasons. Here, the ED, or the Enforcement Directorate, has frozen the assets under PMLA. Remember, the company has said no impact on the operations, and Anil Ambani is not on board for the next 3.5 years. Keep that stock in focus too. Adani Power, on the other hand, will also be in focus. Remember, the dispute with Bangladesh Power Board over cost of billing continues, and there is a regular supply and payments that also continue on the other hand as well. Titan is going to be in focus because of the earnings that were reported post the market hours yesterday, so that stock could be reacting to its numbers. The Q2 profit after tax is at 1,006 odd crore rupees. This is versus 705 crore rupees the company had reported in the last quarter of the last year as well. Now, when we look at the entire growth parameters, they've been pretty strong, but there has been a slight miss on the estimates of Titan earnings. Also, the company is going to be in focus because of the margins that have improved to 11.2% as well. So that's also clearly in focus. All right, let me also now go across to Devarsh Vakil, Deputy Head of Retail Research at HDFC Securities, who's now joining in to share with us his views on the markets. Devarsh, how are you looking at the earnings season that's now also going to get into the fag end? We have the next 10 days now as far as the earnings are concerned. What has stood out for you in terms of any kind of earnings upgrade? Very quickly, if you could, Mark. All right, we have the markets open first, Devarsh. Let me just come across to you in just a moment and look at how the markets are opening at this point in time. 25,753 is what we have. Slightly lower as far as the Nifty is concerned. Viewers, we have a mixed trade as far as the sectors are concerned. Infra, Pharma, and even the mid-caps that are up in trade, just like how Shell was pointing out. Pharma, mid-caps, both are in focus on the positive end. Let's look at, however, the sectors that are lower. IT, banks, financial services, private banks, autos. These are the sectors that are still lower in trade. Top movers on the Nifty, you have Bharti Airtel, you have JSW Steel, Adani Enterprises and Adani Ports also hovering higher in trade. Although the gains are limited, you can see a 0.5% higher to about 1.5% uptick that we are seeing there. On the losing side, you have Coal India, Tata Consumer Products, Power Grid, Maruti Suzuki and ONGC at the open right there. Any big flies that we are seeing as far as the Nifty 500 basket is concerned? Not so much right at the open, but we'll come back to it shortly. Let me quickly go back to Devash. Devash, your sense on the market opening today, and of course, what are you watching out for in the earnings momentum?
Right. Thank you, first of all, for having me on the show. So, as you asked, the earnings season has been, as per our expectation, little above our expectation. The overall earning growth has been driven by the oil and gas, especially the oil marketing companies, where there is a huge YOY growth, technology selectively, cement, capital goods and metals. These five sectors have contributed almost 90% of the incremental YOY accretion in the earnings. Overall, this season has been, as per our expectation, little above our expectation. And now the FY26 aggregate Nifty earnings have been upgraded to around 1100 rupees per share. So that makes us trading at around 23 times forward 1 year earning, and 27 is around 1200 or so. So I think we are on track to deliver a good earning season this time.
All right, in a big breaking news, viewers, remember Prime Minister Narendra Modi has met top exporters from the labor-intensive sectors like apparel, gems and seafood to also discuss the impact of US tariffs. Senior ministers including Nirmala Sitharaman and Piyush Goyal have joined the discussions aimed at boosting India's global trade edge. Remember, heads of export promotion councils have also attended the meeting. The government is also expected to release a package for exporters if a trade deal with the US is not signed soon. Surbi, who's covering our economy space in the business today, is now with us with more details on that breaking update. Surbi, good morning to you. Good to have you with us. This seems like a big relief that could be on the way for exporters amidst all that uncertainty on the trade talks. What exactly are you finding out from your sources? What has this meeting really brought about?
Yes, good morning. So exports have been very much on the agenda of the government, and an export promotion mission is being finalized. It is likely to be approved by the cabinet sometime this month is what we are getting to here, and it's going to provide a lot of support in terms of interest, subsidy and incentives to the exporters. The government's also working on, the trade deal with the US, but given the complexities around it, it's been long in the making, and we're still not sure when it's going to happen. All the signals from both sides show that it's definitely going to happen. But in the interim, exports to the US have fallen significantly, while overall trade, overall exports had grown till last month, September. When you look at the US, which is the largest market, exports have fallen by about over 37% between May and September. And a lot of exporters have been saying that either they've stopped getting orders or they have to give extra discounts to continue getting at least some amount of orders. So there's a lot of labor-intensive sectors are also where we have a lot of employment, MSME. So the trickle-down impact on the economy is going to be huge. And that's why this continues to be a key focus area of the government. Evidence doesn't now the Prime Minister has exportations.
All right, okay. Surbi, thanks a lot for that. Meanwhile, viewers, remember, as far as the oil imports are concerned, Russia continues to be India's largest source of crude oil, despite the US sanctions and tariffs. And according to global trade analytics firm Kepler, we are given to understand that Russia has shipped around 1.62 million barrels per day already in October, accounting for nearly 34% of India's total imports. However, imports from the United States have also seen a sharp surge, climbing to 5,68,000 barrels per day. This is the highest since March of 2021 that we are given to understand. Now, US crude also accounts for 12% of India's total imports. As you all know, remember, Iraq was the second largest crude oil supplier to India, with Saudi Arabia now at number 3. However, a further upside in the US crude inflows is also seen as limited, as freight costs, longer voyage times and WTI's lighter yield make it less competitive and also beyond the current arbitrage windows as well. Refiners, meanwhile, are expected to exercise greater caution on Russian grades, while a complete halt in Russian imports is also seeming unlikely at this point in time. Kepler also expects a dip in the month of December. Let's go across to our guest now, Devarsh, to get an overall sense as to what's happening on the trade front. Devarsh, quickly help us understand when it comes to the entire trade uncertainty that still looms pretty large at this point in time. Exporters are still hoping for that big relief package from the government. You just heard Surbi talk about it too. And of course, at the same time, the sticky issues of Russian oil, they continue to show that at least Russian oil and the imports from there continue to be at the top spot for India amidst all of this.
Right. So yes, there are external headwinds, as you mentioned. We gradually will diversify our oil imports as we have started taking account the expectations from the US administration and I think the mutually agreeable trade deal with US will require that the India will diversify its uh, resolution will require that the trade negotiation will require that we diversify our oil imports, and that should actually eliminate a lot of policy uncertainty on the export sides. As you mentioned, the labor-intensive sectors are actually reeling under the higher US tariffs. Once we have the acceptable resolution with the US, I think that will remove the policy uncertainty. That will also restore the FI confidence. The stronger Q2 earnings that is happening right now, I think that is likely to support our market. See, domestically we have a resilient economy. The agriculture side is robust. We had a good monsoon, the kharif sowing and the adequate reservoir level. That leads to good rural demand. And I think the urban side also will help because of the RBI's rate cut and the GST rationalization. So I think overall we are expected to have a good earning season and the rest of the season financial year this year.
Right. Shell, let me bring you in here as well. When it comes to the export-oriented sector, this entire year we have actually seen a lot of volatility on the export-oriented sectors and underperformance on large ones like the IT as well. How is the performance expected from here on? What are you seeing currently on the charts as well on the export-oriented sectors? Because the uncertainty still looms large on the trade front. We are not sure whether we are going to be coming in closer anytime soon for a trade deal.
I think, Sakshi, we'll just have to wait for the deal to be signed. Every single day, every single week, this deal has been talked about. Nothing happens. So once it happens, we'll again revisit the charts and take a look. Two stocks, of course, come to mind. One is Gokaldas Exports, and of course the other being Himmat Singh Seede. Both these stocks are great textile plays and have a strong overseas earning component, especially from the US. Let us see how it goes. For the last 6 months, every single night, this trade deal has to be announced. It never happens. Once it does, we'll take a look again.
Fantastic. Okay. You know, the other talking point is all about the opportunities beyond the secondary market as well. The IPO space and the rush there continues too. Devarsh, are you also looking with a close eye at all these IPOs that are being launched? I mean, we have 3 already in this week. Lenskart IPO will close today for subscription. Grow IPO opens, and then we have Pine Labs as well. Any one that actually has stood out for your attention?
So we are not allowed to speak on IPOs as we are involved in a lot of banking side on TC. But overall, I would comment that there are opportunities in the new age sectors where the sustainable growth runway is very high. So beyond the listing, once the prices settle down, I think we can have a look at it, especially in the non-lending financial side. Some of the companies which are coming have a huge runaway ahead. So I'd look at them post-listing once couple of quarter results are in and once the valuations are a little more center than what they are coming in right now.
Okay, got that. Since you did talk about the new age tech space, Paytm is going to be coming out with the results today. What's your big expectation there?
So again, I'm not allowed to speak on specifically on these stocks, but I think these companies have now shown path to profitability. A lot of platform companies have now shown that they can also use their operating levers to show the path to profitability. So I think there is a room for investors to have certain portion of their portfolio into these new age companies, which traditionally was not finding space there. So I think it is time to relocate all these platform companies very vigorously.
All right, we're running out of time now. Thank you so much, Devarsh. Thank you, Shell, for joining in and for, of course, sharing all those information and insights on the markets. With that, it's a wrap on the Business Today show right here. But at 3 p.m., do tune in at the market closing show on India Today. I'll be back for that.
मेरे लिए
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Ladies and gentlemen, welcome back on Business Today Television. It's Tuesday, therefore the weekly expiry of the Nifty. You have a mild downtick, which is only to be expected. The Nifty sideways, 32 points lower, 25,732. Lot of strength coming into telecom stocks thanks to a stunning set of numbers announced by Bharti Airtel. It's the top traded counter, 2.9% higher, 2134. Also in strength is Indus Towers. Two positive developments happening there in terms of the Supreme Court case on aggregate gross revenue, as also parent Bharti Airtel plans to increase its stake into Indus Towers beyond what is at this place. After that, you have strength coming in 3M India, 11% higher at 34,105. Dredging Corporation continues with its rally, 2.8% higher at 914. And of course, you have a strong move coming into stocks such as Power India, LG Brothers. This is again an auto ancillary, and of course a strong move coming into counters such as ISMO, 5% higher at 903. Beyond that, if you look at stocks that have hit record highs in this kind of a market in the NSE 500, it's the banks that continue to gain interest. City Union Bank, 6.5% higher, 251. L&T Finance, MCX, Shriram Finance, all in top shape in terms of volume buzzers. A lot of strength coming into RITES, 1.7% higher at 252. There is strength in Ambuja Cement, about 1% higher at 582. And that's how things are moving at this point of time. Arpit Beriwal joins us, derivatives analyst at Motilal Oswal Financial Securities. A view on Bharti Airtel. Arpit, a very warm welcome to you and good morning.
Well, good morning to all. If you look at the overall chart structure of telecom space as a whole, and you've seen a huge outperformance in Bharti Airtel particularly. So if you look at the chart structure of Bharti Airtel, a very strong time frame, technical pattern on the monthly time frame, and recently it has given a classical range breakout on the monthly scale after almost 4.5-5 months above 2040 levels. So setup wise on the weekly, the structure is higher lows, higher low structure is intact from last 5 weeks, and today it's at new life highs. So looking at the setup wise, definitely the stock has room to hit towards 2200, 2400 positionally in next couple of months time frame. Immediate basis 2050 would be the major support level. On the upside 2200 and then 2400 positionally we can see going forward.
Okay, 9:30, ladies and gentlemen. The first 15 minutes of trade have lapsed. Remember, this is the weekly expiry of the Nifty, flat at the moment, 54 points lower. 25,700 is where the bulls and bears are battling it out. Nifty Bank 200 points down, 57,900 for you, and the IT index slipping about 148 points lower. Not much of gains across the board as far as markets are concerned, apart from the Nifty Realty Index, which is the top gainer, 0.3% higher, and strength in Hitachi Power. This is the top traded counter, also called Power India, 19,608, 9.4% higher. This, of course, is an FNO stock. Arpit, a view on Hitachi Power.
So looking at the overall chart structure on the monthly time frame, we've been seeing the stock corrected from 21,800 towards 17,000 levels, and on the monthly time frame after almost 3 months it has negated the formation of higher lower highs. A strong bullish candle. Today we have seen a big gap up opening, surpass its 50 DEMA on the daily time frame. So looking at the chart structure wise, definitely the stock looks good to head back to its previous all-time high near 20,500, 21,000. So I think setup wise it's a very strong setup. We can wait for a couple of minutes to an hour time frame for the intraday basis to hold, but positionally the stock looks good towards 20,500, 21,000 position.
Absolutely. Good morning to you, Arpit. And in fact, what we are given to understand is that Hitachi Energy India's the standalone net profit has risen by 405%. That's almost a 5-fold jump on a year-on-year basis in the Q2 net profit, and that's seeming to be the clear trigger of why such a strong gap up start for the company as well. To 264 odd crore rupees is what the company has reported as the net profit in the quarter ended September. And what we are given to understand is that the sales have also risen by about 16 odd percent to now 1760 odd crore rupees. So the earnings trigger definitely behind that tailwind there that we are seeing at this point in time. What else are you looking at within the market at this point, Arpit? What exactly is the segment that you are finding positive trends in on the technicals?
So if you see overall, Sakshi, we have seen from last couple of sessions, market has been very much stock specific, where index are just consolidating within a range, but stock specific action is quite good. So the sectors to look out for would be first would be the NBFC space, and if you look at the chart structure of particular counters such as AB Capital, LNDFH, where you have seen clearly outperformance in last couple of weeks time frame. So preferred from the NBFC space where the outperformance is seen, preferred would be AB Capital. So looking at the chart structure wise, positionally looks very strong, trading a life high territory, strong setup on the daily and the weekly time frame, trading over short-term moving averages. We can expect good move towards 350, 360 levels going forward. Along with that, classical range they got on the monthly time frame, that is Shriram Finance. Though the stock has rallied quickly from 710 to 780 levels, but definitely there is much more space left in this counter, and from a 2 to 3 months time frame, definitely the stock has much more room to hit towards 850, 900 plus levels positionally. Along with that, if we see energy sector has been relatively quite strong, and if we particularly look at the chart structure of OMCs, so OMCs has been a huge outperformer. So likes of HPCL, BPCL looks very strong in the chart, and within that HPCL would be a preferred pick. Classical monthly range we got above 460 levels after almost 14 months. Structure of higher highs, higher lows is intact on the daily and the weekly time frame. So I think positionally the stock can head towards 525, 550, but yeah, the time frame would be big enough from 1 to 3 months perspective. So these are the couple of ideas that are looking strong in this choppy market overall.
Okay, got that. Let me also look at some of the other key areas that we need to draw our its attention to, and the key stocks there that we can focus on at the current moment. Well, we do have a lot of these PSU stocks that are also on the buzz. The oil marketing companies, IOC, BPCL, HPCL, they're all in focus at this point, 0.7, 0.8% higher in trade. Anything within the OMCs at this point that attract you? Is this space getting back into action?
So definitely, Sakshi, as we discussed, our preferred idea from the energies would be HPCL. So if you look at the overall Nifty Energy Index, so Nifty Energy Index is coming out from its symmetrical triangle breakout on the weekly time frame, and looking at the positional targets, definitely OMCs has been outperformer in this market in last couple of weeks. So going forward, also I sense that HPCL and BPCL would be a preferred picks within the OMC pack as they are trading near life high territories, and technically also the setup is quite strong. A range breakout on the monthly time frame after almost 10 to 12 months definitely augurs well for this stocks. So HPCL and BPCL looks good for 8 to 10% upside move from next 1 to 3 months perspective within the OMC space.
Okay, got that. Let me also just, since we are talking about the PSU space, the PSU banks are getting into a clear trend as of now, Arpit. We also have SBI earnings today too. In fact, in the last 1 week, 1.5 week, we have seen a lot of action on select PSU banks yet again. And there is a lot of buzz around whether there will be an increase in the foreign ownership into the stake as far as the PSU banks are concerned. All this talk about merger is also coming back into flavor. How are you looking at the PSU banks particularly? Do you see that a new bull phase, after strong Q2 results that we've been witnessing could just well get started?
Sakshi rightly mentioned as PSU banks has been the theme of the market, and if we see this time surprisingly when the bank fee rally or it's consolidating a life high territories, the PSU banks are outperforming. And if you look at the chart structure of PSU index as a whole, trading a life high territories, so very strong setup. We have already seen a good move in SBI and Indian Bank in last couple of weeks. So however, if we see the other PSU banks, particularly talk about Canara Bank. So Canara Bank has given a classical range breakout on the monthly time frame about 128, 130 levels. Stock is rallied in last couple of days, but definitely it has much more room for the further upside to about 155, 160 levels. So one is Canbank that looks quite good from a positional perspective. Along with that, second choice would be from the PSU space would be BOB. So similar structure kind of on the monthly time frame, forming higher rise high low structure, gave a range we got about 285, 280 to 83 levels. Structure of higher lows is intact. So PNB, Canbank and BOB looks good from here on as risk reward is favorable. Earlier choices were SBI and Indian Bank. The stocks have already rallied. One more thing I would like to add on over here is, along with that, mid-cap private banks are also looking good, and that would be one idea that would looks good from the mid-cap private bank is Federal Bank. So if we see mid-cap banks also has seen a good rally in the last couple of weeks, and Federal Bank in a classical range breakout on the monthly time frame over 220 levels, strong bullish candle, a range breakout with good volumes, holding at life high territories. So definitely the setup wise looks strong to exchange its gains towards 245, 250. So from the PSU bank, Canbank and BOB, and from the mid-cap banking space, Federal Bank looks for.
Okay, fair point. I hope this is also given a lot of understanding as to where the action currently is drawing our attention at this point in time. But I also wanted to understand from you, particularly Arpit, as far as some of the lagging sectors are concerned, IT, FMCG, autos, these are lagging behind. We have some profit taking that we are seeing also on the banking space. Now even the broader market, some of them, these sectors are also slipping in trade at this point in time. What is your sense on some of the sectors here? Let's talk autos, for instance. We've seen a stellar festive season for the entire sector. We just had the sales figures also come out. Many of the companies have said that this was also the month where we had partial impact get reflected on the sales figures. The earnings also draw only partial impact, but large part of earnings could actually reflect the entire move on GST cuts in the quarter 3 number as well, quarter 3 numbers too. What exactly is your sense on the auto space? Any space that you are particularly watching out for clearly?
First, if we talk about the auto space, actually, as you've seen, since the GST reforms were kickstarting, this was the first sector that was the beneficiary, and we have seen a sharp up move in the series of from July onwards to almost the September series. Post that, from last 7 to 8 weeks, auto index is consolidating in a broader range between 26,000 to 27,500. But the good healthy part is that it is consolidating in life high territories. So a sense that from here on, next couple of weeks time frame, the consolidation is likely to continue, and you have to play within the auto basket with the selective counters. So if you look at the likes of such as M&M, so all these counters have trading a life high territories, but it's still trading in a range. So you have to play a very selective stock specific approach within the auto index. The bigger trend is still positive, and if you look at the chart of M&M, for example, the stock is turning from its 50 DEMA. The stock corrected from last couple of days. It is at support zone. The stock can again head towards 3650, 3700 levels. So you have to play a range bound move within the auto pack. The bigger trend of the sector is still positive, and within that, M&M would be a preferred pick going forward. As you can see, outperformance in this counter going forward.
Okay, let me also look at some of the other pockets that are drawing our attention. Clearly, it's the pharma space that is getting some wind behind it too. Let's try and understand the pharma pack as well, Arpit, with you. How are you looking at the pharma space? Do you think there is enough and more opportunity here that investors can scout at the moment, or do you think this is going to remain in a broad range in a consolidated space even now? And if one has to really look at the sector, one has to be very selective in terms of the stocks. What exactly is your strategy?
So looking at the pharma space, interestingly, there are a few pockets that are continuously moving upward, and at life high territories where the few counters were still stuck in a range. So as our theory suggests, that is outperformance. You have to pick the outperformance sector stocks within the sector. So look at the chart structure of Laurus Lab and Divi's Lab. Relatively, these two counters are very strong on the chart on the multi-time frame analysis. So if you look at the chart structure of Laurus, a classical uptrend counter, a strong higher rise halo structure on the monthly time frame. The base of the stock is shifting higher. So I think Laurus definitely you can see 4-digit figure and much more higher towards 1100, 1200 levels positionally. Second from the pharma space would be Divi's Lab. So Divi's Lab, the stock corrected from June to almost September series, but we have seen a strong pullback from the lower levels, and now we have seen a kind of a V-shaped recovery and back to its life high territories. So I think going forward, the outperformance is likely to continue, and stock can head towards 7,000, 7,500 positionally. So Laurus Lab and Divi's Lab we are preferred pick within the pharma space, where we can see relative strength in this counter and outperformance going forward.
Okay, got that. Let me also look at the key stocks that we can now look at now as far as the stock's performance is concerned particularly. Okay, let me actually focus a bit on Titan again. That's still among the top movers. You can actually look at the stock which has been moving up after Q2. Profit has zoomed 59% year on year as well, and Morgan Stanley has set a target price of 3,953 on the stock too. Arpit, on Titan, what's your thought there? Remember, we have had an entire 1 year when gold and silver prices have shot up through the roof. We have seen a stupendous, unprecedented year of returns on gold and silver. When it comes to Titan, and what we have been seeing from its jewelry division as well, finally after the kind of a lull of 3-4 odd months because the prices were unabated, we are finally seeing footfalls return there. People now spending more as far as the upcoming weddings are concerned. People are again buying that space too. How are you looking at, in fact, 46 lakh marriages is what we mentioned going to take place in this 45 days of a period. That's the auspicious period that starts on November 1st. What is your thought on Titan? Of course, it has the other play of eyewear as well. Now we have a lens card competition there. So there's a lot of things that's buzzing, and we need to focus on Titan as to how to look at this story now.
Sakshi, if I just go back to a couple of years back, looking at the time frame analysis of Titan, from last almost 2 years, right from November 23 and now we're in November 25, the stock has been trading in a broader range between 3,000 to 3,800 levels on the monthly time frame, and the stock is back to its life high, near life high territory. So the good consolidation we have seen in on the monthly time frame that clearly indicates the bigger trend of the stock is positive, and the base of the stock has shifted higher. However, as rightly mentioned, we have seen a very stupendous rally in gold and silver in last couple of months time frame. though Titan has been still range bound. So our sense is that a level wise 3850 would be a major breakout level for Titan on the monthly time frame analysis. Closing above 3850 will definitely set the stage for the Titan to new horizon towards 4200, 4500. But till then, our sense is that the stock is likely to be in a broader range between 3500 to 3850. Closing above 3850 will definitely opens the gates for new life high towards 4200, 4500. But till then, it's going to be more of a range bound counter within this range.
Okay, fair point. We'll keep an eye out on that too. The other one that I wanted to focus on is as far as Bharti Airtel is concerned too. Again, one of the other top ones that we are looking at on the back of the earnings that are coming in from the telecom basket. Bharti Airtel has actually been an outperformer when it comes to the telecom basket. It was a monopoly play so far, and we have seen the stock really outperform in the last 1.5, 2 years or so. Even today after the earnings, it's trending at 21, 25, 2.5% higher. Look at the last 1 year where the benchmark index, the Nifty, it has been only able to deliver about 4% returns to investors. Bharti Airtel has jumped by 33.6% as well, and promising move is what we have seen on the stock. Your sense on how are you looking at Bharti Airtel? Do you think there is still more upside from the current levels as well? And are things going to get interesting, Arpit? We are also looking at maybe over the next 6-8 months Jio IPO also to come in, and that could also increase opportunities for investors within the stock markets there. How are you looking at it?
Sakshi, if we see the overall telecom story, as we have been quite consistently bullish on this counter right from the level from 1400, and if you look at the chart structure wise also, first from the technical perspective, a very strong performance we have seen in this counter from last couple of months time frame. Again, if you see the monthly time frame, again a classical pole and flag breakout we have seen after 4.5 months after huge consolidation between 2000 to 1800 levels, and it has given a range breakout of 2050 levels. So looking at the chart setup wise, definitely the first target would be on radar would be 2200. That would be the pole and flag target. But here on also definitely the upward momentum is likely to continue. And looking at the position time frame also, the stock can definitely head towards 2200, 2400 positionally. This has been a huge outperformer. And looking at the setup wise, the outperformance is likely to continue. The new support zone for Bharti Airtel will be around 2020 levels.
Okay, fair point. Viewers, now we will just help you understand beyond the markets as well, where exactly can you be really looking at for opportunities, and that's in the world of mutual funds. Business Today has brought out its latest edition of the magazine, which is a mutual fund special edition, and this has been done, of course, in partnership with Value Research. In fact, on the magazine, the key highlight is that we have brought out for all our viewers a list of top 100 mutual fund schemes that you should be looking at. In many ways, this magazine edition is also a guide for your 2026 mutual fund investments too. In fact, we also did speak to Dhiren Kumar, the CEO of Value Research, as part of this fortnightly edition. What are the key insights that he wants to share with all you investors who have also started to invest via mutual funds into equities and into debt? So let's listen in to what he had to say.
For most people, getting started, one fund is good enough. Once you have built it up, maybe 2-3 of them are good enough. And after that, and if you want to really keep it simple, if you commit to the principle that you are not going to exceed beyond 4, it is possible, because 4 funds gives you 2 or 3 funds gives you meaningful diversification. You get exposure and active management, brilliant team at work for you, for a very small cost, and you get all the benefit. The problem is that mutual fund is also a consumer product. It is being pitched as something new, something special. It is always vying for your attention. And somebody will be launching a fund and you will get curious, you will get attracted, you will buy into the story. But, and today, earlier I used to say, before 2018, when consolidating your portfolio was very simple because there was no capital gains tax. But today I have a different story. The different story is that don't consolidate your portfolio mindlessly. There is a cost of consolidating your portfolio. Make sure that your portfolio, the mutual fund that you hold are good. If they are not good, by all means sell it and replace it and consolidate in fewer funds. 2-3 funds can give you meaningful diversification for a lifetime. That is why I keep saying that invest in a fund which is better diversified. Don't get into sectoral, thematic, or a narrowly focused fund, because they will do exceptionally well on some time at some time, and they will do exceptionally poorly on the other occasion. And every segment of the market, every asset class is cyclical, and that is when they will disappoint you. So keep it simple. Choose few funds from a diversified category. Be at it for many years. Don't jump out of the fund on a brief period of underperformance, because best of fund managers go through a lean period, and that may not be end of it.
All right, and this only brings me to tell you that this is the edition that's already out on the stands, and you must definitely grab a copy for yourselves in case you are looking for a clear masterclass on mutual funds. This edition will actually solve a lot of the questions that are in your minds as well. Going back to Arpit now. Arpit, the first half an hour, 35 minutes of the action is done and dusted, and you're already seeing on the expiry session a 25,687 level now on the Nifty. We've slipped below the 25,700 mark as well. Remember, tomorrow is a market holiday as well, and so we have a truncated action to also look at. What do you think is the reason behind the lack of strength there? Do you see some further downside on the Nifty from these levels as well? And what are your strategies on the index?
So Sakshi, if we go back to the October series, where we have seen a very sharp rally from 2,500 to 26,000 levels, from last 10 days, Nifty has been consolidated in a band. And if you look at the chart structure of Nifty on the weekly time frame, it has negative formation of higher lows. That clearly indicates that 26,000 is again acting as a hurdle, though it is consolidating from last 8 to 9 sessions between 25,600 to 26,100. So on the downside, 25,650, 25,700, where the index is right now currently quoting, would be a key level to watch out for. And a sense that index is likely to consolidate because selective sectors are still underperforming, such as like FMCG, IT, that clearly has weightage on the Nifty, which we have seen that underperformance continue. So I sense that Nifty is likely to consolidate between 25,600 to 26,000 broader range. From an expiry day point of view, definitely 25,800 would be a key hurdle level on the immediate basis, where on the downside 25,600 would be the support zone. So I sense that we have to play within this range. Upside is capped definitely on the Nifty, but if we see the look at structure of Bank Nifty and the broader market, we have seen outperformance. So right now it's a mixed bag structure within the index time frame. It's better to play within this range 25,600 to 25,800 for the expiry day point.
Okay, thank you so much, Arpit, for being with us in the morning edition and of course explaining to all our viewers the insights into the markets, the strategies we need to adopt as well. Good to have you with us always, and thank you so much for your time.
Thank you.
All right, viewers, 25,700. Again, the bulls are attempted to go beyond that level once again and buy that dip. But whether this will sustain through the course of the session, expiry volatility also playing its part, we'll of course have to bank a lot on the earnings that get announced as well, on the blue chip companies as well as the mid and the small cap names as well. Stay tuned with us on Business Today Television, as up next I'll be back for an IPO specific special edition on What's Hot. Stay tuned for that.
Ladies and